Hello everyone. I welcome you all to Tech Mahindra's Q3 FY'26 results press conference. Before we begin, I would like to inform you that there'll be a Q&A session at the end of this conference. Today we have with us on stage Tech Mahindra's CEO and Managing Director Mohit Joshi and Chief Financial Officer Rohit Anand. Without any delay, over to you, Mohit.
Thank you, Abhilasha, and good evening to everybody. You must excuse me because I have a bit of a bad throat, so please excuse the occasional coughing. And welcome to our earnings for the third quarter of fiscal year 26. So we're starting the calendar year, on a very positive note. The third quarter has delivered a very strong performance, with most of our targeted market segments contributing very meaningfully to our results. Uh, Most importantly, the deal momentum has remained robust throughout the quarter. We've recorded our highest quarterly deal bookings in the last 5 years, our highest deal wins on an LTM basis in the last 5 years, and our largest deal win in Europe in the communications industry. This really underscores the strength of our client relationships, the relevance of our capabilities, and our ability to deliver long-term value at scale. Before moving to our third quarter business performance, I just want to touch very briefly on this large deal win in Europe. This is a strategic engagement with a leading European telecom provider. It's one of the largest wins in the company's history. And the multi-year partnership is about a comprehensive modernization of the client's applications across both the CTO and the CIO domains. This is aimed at accelerating innovation, strengthening digital resilience, and achieving AI-led operational efficiencies. This has been enabled by our deep domain expertise and proven transformational capabilities. This win further strengthens our leadership position within the telecom vertical. So now, having given you some details on our mega deal, I just want to turn to our performance for the quarter. So revenues have grown by 2.7% year on year and 1.5% quarter on quarter on a reported basis, and 1.3% year on year and 1.7% quarter on quarter on a constant currency basis, making this our fastest quarterly growth in the last 3 years. Moreover, this performance has been driven by broad-based growth across communications, manufacturing, high tech, retail, and healthcare. At the same time as we've grown revenues, operating margins have expanded by 290 basis points year on year to 13.1%. This really underscores the progress enabled by our improved operating discipline and the quality of our revenue growth, as we have maintained pricing discipline and enhanced our revenue mix. For Tech Mahindra, the all-important communications vertical has grown by 4.7% year on year during the quarter. We are seeing signs of stability across the US, coupled with stabilization of top client spending. Europe is expected to move from a phase of stability into a growth phase, supported by this large deal win that we reported earlier today. We believe the comms vertical is well positioned to be one of our growth verticals as we move into 2027. The BFSI portfolio has declined by 0.8% year on year, primarily due to higher than normal furloughs during the quarter and the passing of annual productivity gains for a large infrastructure contract in the rest of the world, which additionally impacted revenues, for the region. The long-term BFSI trends remain favorable, and we continue to make inroads in engaging clients with tailored solution offerings in this important vertical. And we continue to see good demand across digital transformation, customer experience, data and analytics, cybersecurity, and risk and compliance, coupled with AI adoption. Manufacturing continued its strong trajectory this quarter, building on the momentum from the previous quarter with a year-on-year growth of 11.7%. As stated earlier, we are seeing good traction in aerospace and in the industrial segments in the US, while in Europe, growth was supported by the ramp-up of a large automotive client during the quarter. The US automotive segment continues to remain in a wait-and-watch mode, and we expect demand trends to turn more positive over the medium term. The high-tech vertical declined by 4.6% year on year. However, it showed positive momentum during the quarter, driven by engineering services, particularly in the semiconductor segment. That said, we expect the high tech sector to remain volatile as companies continue to operate under cost pressure and continue to exercise caution in their tech and ops spending. Retail, travel, and logistics continue to perform, delivering 11.7% year on year growth. This has been supported by a strong traction in our logistics business and above normal seasonality in the BPS business for retail. On a geography basis performance, the Americas has grown by 2.1% year on year. Europe delivered a strong growth performance of 11.2% year on year, supported by the large deal ramp up in European auto that I spoke about. Revenue from the rest of the world has dipped by 4%, primarily on account of furloughs and annual productivity gains. That said, our priority markets within the rest of the world, and we have called out these priority markets, they have grown by 12.9% year on year. And this reflects our continued focus on selected markets, which should better contribute to growth in the future as our mix continues to shift. If we look at our client portfolio, we added three $50 million plus clients year on year into our 50 million plus client bucket, reinforcing the strength and scalability of our client relationships. Additionally, revenues from our 20 million plus clients. Now, as you know, this has been a key focus area for us, right? Growth in our top accounts. This continues to be significantly higher than the company average. And I believe strongly that this performance underscores our focused approach to scaling strategic accounts and deepening long term partnerships by bringing tailored solutions to clients and applying the distinctive domain expertise of our experienced staff. From an AI perspective, AI continues to be a growth pillar of our strategy as we support clients in moving from experimentation to execution at scale. We are seeing AI increasingly embedded across large enterprise engagements, driving business experience, process and operations transformation, IT build and change, as well as IT operations. Client programs are shifting from pilots to scaled multi-year initiatives that are integrated into their operating models. In line with this, our partnership with Google positions us as well to accelerate the adoption of Gemini Enterprise, leveraging the Gemini 2.5 multimodal models to drive human-centered innovation and scale AI adoption across global enterprises. We have also signed a memorandum of understanding with the UT Tech Dallas for AI-led innovation, skill development, and research. We will also launch our first Makers Lab in the US, in Dallas, focusing on pushing the boundaries of AI, data science, Gen AI, agentic AI, quantum computing, cybersecurity, and cognitive network innovation. In terms of deal wins, as shared earlier, our deals wins this quarter stands at a whopping 1.1 billion, including the mega deal stated earlier, representing a 48% year-on-year growth on an LTM basis. This strong performance is a testament to the focused investments that we have made in strengthening our sales engine, our solution-based go-to-market offerings, and the growing relevance of our AI-enabled capabilities, which are resonating well with clients and contributing meaningfully to these wins. Other notable deal wins include being selected by a global HCM SaaS company to provide implementation and customer support across its products portfolio. This engagement with a California-based company leverages Tech Mahindra's HCM and CX centers of excellence, along with capabilities in AI, automation, solution configuration, and data integration to drive greater efficiency, scalability, and innovation, resulting in enhanced customer experience and optimized cost. Tech Mahindra was selected by a leading European aerospace manufacturer as a strategic partner to support engineering across all aircraft programs. This service includes an end-to-end capability for aircraft operators and MROs, leveraging Tech Mahindra's deep expertise in aeronautics and strong delivery capabilities. This collaboration will ensure comprehensive support engineering across all aircraft programs. We were selected by a leading US-based comms provider to lead their transformation and system integration initiatives. This strategic engagement focuses on consolidating operations into a single trusted partner, modernizing legacy systems, and reducing technical debt through automation and best practices, leveraging our proven delivery excellence and deep expertise. This will drive cost optimization, accelerated growth, and enable scalable talent deployment through a core flex model. From a healthcare perspective, we were selected in the US as a strategic partner by a healthcare provider to lead their enterprise digital transformation. This engagement includes optimization, simplification, and cloud migration, transformation to a unified tech stack to deliver better experience, cost savings, and moving them into a managed services environment. From a banking perspective, we were selected by a leading US-based banking institution as their strategic partner to modernize their enterprise payment platform. This incorporates real-time rail capabilities across markets, cash management, and wealth management, leveraging our center of excellence to deliver large-scale, complex transformation and using our deep domain mission-critical banking platform capability. From an awards perspective, as I'd mentioned during my last earnings, we marked our 39th anniversary on the 24th of October, 2025 with our brand refresh. Since then, the refreshed brand has been really well received across stakeholders and has reinforced our positioning around innovation and AI-led capabilities. Further reinforcing the strength of our brand, we received the Best Brand 2025 award at the ET Now Best Brands Conclave by the ET Edge. I'm proud that our refreshed brand encapsulates who Tech Mahindra is in the AI era: agile in execution, bold in vision, collaborative in our culture and with clients, and discerning in our decisions. This branding evolution positions us as the future-ready transformation partner enterprises trust to drive digital reinvention with intelligence and speed. At its core, our refreshed brand reinforces our promise to help clients scale at speed through AI-led innovation and precision. Last quarter, we successfully concluded the third season of the Global Chess League right here in Mumbai, reinforcing our commitment to innovation, strategic thinking, and global engagement. Over time, these efforts support brand equity, talent attraction, and a differentiated market presence. This creates sustainable value for our shareholders. Tech Mahindra has once again been recognized as a global sustainability leader in the S&P's DJSI. We have proudly regained our number one position globally in the. We have also been A list for both the Carbon Disclosure Project Climate Change and the Carbon Disclosure Project Water Stewardship 2025 program, a testament to our collective commitment to sustainability, transparency, and environmental stewardship. So finally, as we close, I would like to highlight the launch of our new culture model. It's called Limitless Together, which brings our employee value proposition to life. Limitless Together reflects our belief that when we unite with purpose, support each other, and push boundaries, there is no limit to what we can achieve. It is more than a phrase, it defines how we work, grow, and succeed as a team. As Margaret Mead once said, never doubt that a small group of thoughtful, committed citizens can change the world. Indeed, it is the only thing that ever has. And so I have no doubt that a group of thoughtful, committed tech mighties again will change the world. I believe this alignment, Limitless Together, is translating into stronger execution, and that each quarter's performance takes us that much closer to our FY'27 goals. To reiterate, we expect to grow higher than the peer average by the end of FY'27, while progressing towards a 15% EBIT margin. This strong quarter reinforces our confidence that we're on the right path and building sustained momentum towards our long-term aspirations. With that, I hand you over to Rohit, our CFO, to take you through the details of our financial performance.
Thank you, Mohit. Very warm welcome to everyone joining us today from across geographies, online as well as in the room. Turning to a performance for the third quarter for fiscal year 26, this was a very well-rounded quarter, with majority of our growth engines coming together to deliver a very strong set of results. Our revenue for the quarter stood at $1610 million US dollar, representing 1.5% sequential growth and a 2.7% year-on-year growth on a reported basis. On a constant currency basis, adjusted for FX, revenue increased by 1.7% QOQ and 1.3% YOY. In rupee terms, our revenue was 14,393 crores compared to 13,995 crores in the previous quarter, instead of increase of a 2.8% in sequential basis and 8.3% on a YOY basis. For the quarter, our operating profit was 211 million, with operating margin expanding close to 100 basis point to 13.1%, marking the ninth consecutive quarter of margin expansion. Gross margin expanded by 120 basis point QOQ, driven by improved productivity and volume growth. In INR terms, operating profit reached 1,892 crores, representing a robust year-on-year growth of 40.1%. These results reflect disciplined execution, sustained focus on efficiency across the business while maintaining momentum in top-line growth. Other income for the quarter was at a loss of $2.4 million US, primarily on the account of forex losses. As of December 31st, our hedge book stand close to 1.05 billion compared to 1.33 billion in the previous quarter. Our effective tax rate for the quarter was 25.7%. The normalized ETR for the full year stays close to 27%. Our profit after tax before exceptional items for the quarter was 9.2%, up 180 basis point on a YOY basis. The exceptional item for the quarter relates to the one-time provision of $30 million in accordance with the new wage code notification. Through disciplined capital allocation and sharper execution, we've strengthened our return on capital employed to 26.9%, reflecting the business that is not just growing, but growing efficiently. Our year-till-date free cash flow to operational PAT ratio is 123%, which gives a validation of a working capital unlock that we're delivering in the business. During the quarter, the free cash flow was 194 million, driven by strong collection efficiency and continued improvement in working capital management. Our DSO decreased by 4 days on a quarter-on-quarter basis, driven by reduction predominantly on our unbilled receivables. Our total deal wins in the quarter stood at 1096 million, reflecting a growth of 48% on a last 12-month basis. The quarterly deal win this quarter is the highest we've had in the last 5 years. As we move ahead, we remain focused on sustaining our operating rigor, strengthening execution, and delivering our FY'27 strategic goals, where we continue to remain on track. Thank you.
Thank you, Mohit and Rohit. We will now conclude this stream. For those of you who have joined us on social media, thank you again for joining us.